Good morning, MMTs. This is live. It's here. It's now. We got a whopping gap right here, right now at 6:15 a.m., 7/31, 2012. Yes, it is the last day of July. And trade management will be looking at resistances on how to get the lower end. If we can break up above 605 to 607.50 here, then we can really get a lower, much lower market in the 605 put. But it has to go up to that price level in order to get these lower levels. Now, they will be tradable for an entry and an exit before you get to the lower price chain. Based on this gap price open up, it's a gap, and how to trade them. So we will be on that 605 put, and will be heavily involved in the 8-3 $600 call that was marked up yesterday with 29,000 contracts traded. Heavy volume. And of course, you know, volatility gaps after the earnings, people have just come right back in, and the trend has changed and it's back. That means that this Nasdaq 100 is going to go much higher, because this Apple has got a weighting to that Nasdaq 100, about 16%. Don't quote me on it 100% because things can change daily now. But I do know that's what the weighting was to that Nasdaq 100. So what we look for is the top end of resistances in pre-market. Not only that, we can clearly show you a quick trip on the gap open down list here. We have PRSS, MicroStrategy. We've always traded that. Seagate had a problem. All earnings are related. But on the other hand, on the NASDAQ, look at the gap open up. Whoa, Apple 8. CRUS, what's going on there? 5.91. LQDT, it's got to be earnings, earnings, earnings. That means that each one of these gaps are going to have resistance. We're going to be focusing on this one right here and how much premium that they take out. Now, when we take a look at the listed stocks, we always want to know what their little gaps may or may not be. And we'll show you on their gap open down list. COHHUMNE. Oh my goodness. These are probably all earnings related. Once again, Target. Look at this stuff here on the NYSE gap down list and look at the symbols. Put them in a market. TIF, another retail stock down. This is very important stuff. Don't miss this. We will have to deal with it after we get our entries and exits. However, let's take a look on a gap open up list. Okay, you got some good news out of some of them. CMI, we already knew it was going to pop. Same thing with our CEO. So MMTs, this is a gap open up there. So I'm going to conclude 6:19 a.m. Pacific Standard Time, 7/31/2012. Not only that, it is the last calendar day of the month. We do have Mr. Bernanke. The Federal Reserve will have their meeting. Everyone is looking for the QE3. Regulators across the pond in Europe have been right in there flooding their system with capital. Never get in the front of that. Just understand where the prices are on the Google trade. Once again, I'm going to go over here to the put side. We traded it correctly based on that wall of resistance at 642 area. And then there was over a $10 reversal, and the put side went down to 590 yesterday. We bought at 620, and then they ran up here, and the last print was 1080. Now, we'll be trading the same weekly 8-3 640 put today on the opening bell. Based on equity, price resistance, as the prices have gone much higher, which was wonderful, great move to those resistance levels. Let us not forget when I shorted it at 670. So we know where that wall of resistance is, and we're looking for, so let's say we come up to 638.50. If we can get a $4 move up there and it gets real weak, we'll make our transaction on that 640 aggressively. The 635 is right at the strike on Google 635 put. Now, look what they did. It had a close, and then the other day they hit $4 on the low on the opening bell, and they went to 950. Those are great trades. Those are great. And they're wonderful to have. So on the Google Trade Management here and now, going into this opening bell in 9 minutes, we're going to be watching that 630 call. Oh yes, they marked them down beautifully. They were $15 on the high, and what did they do on the opening bell yesterday? When Google ran up to 642, they ran these to the high. And then look what happened. They came back below the close at 940 to 6.61. And now the last print is 780. We have a trade for this call. And we will line our bids right here on this one at about 3.8 on a limit order here and now. Before that opening bell on that option, 3.8 on the 625 call, which had a high of 1950, and the other day it closed at 1280. But let us not forget, the low was 300 pennies below, a little more, than the close. So when they ran them to the high, they lost $10 value yesterday in these calls, okay? And they printed 1090 on the close. And, you got a bid below that. Yes, it's going to get interesting. I've got a bid right here at 3.8 on the 630 for right now. On the 625, I'm going to go 6.7 on my opening bid in case this thing, you don't know. If they sell it down real quick and hit support and that thing bounces off support in price, well, the wholesale entries work over here. Okay? That's the call side. Okay? Now, I'm going to conclude the video. I've done the pre-market setup. Listen, it's going to be light volume today because you got the FOMC. Yeah, no one's going to get around that. And in the high frequency model, you'll see exactly what I'm talking about. Let's get ready to rumble on the 605 put right here at the very best price. Based on that big whopping gap to 603, they're going to take that premium all the way out of here. And we're going to make our transactions based on the wall of resistance and the low end, which makes for a great day.